back at the PDAC 2019, and I'm very happy to have David Erfley of the Junior Miner Junkie. David, thanks for being on the segment today on our Stock Snapshots.
My pleasure. Thanks for having me, Sonny.
Thank you. So, first day again, and let's talk about the gold price. You know, the gold price went up to as high as $1,350. Everybody was really, really positive. Things went very well, and then on Friday, it went all the way down to $1,300. You know, in a matter of just a few days, just below it as well. What's happening?
Well, it's the pause that refreshes so far.
Yeah.
You know, it went up 4 consecutive months. Mm-hmm. You know, 1350 to 1365, that's been strong resistance for what, 6 years now?
Yeah.
So it was overbought when it got there already. Mm-hmm. So it needs to build up some more strength to get back up there. So this is a healthy correction for now. Mm-hmm. But I would not like to see the gold price go below $1,250 on a weekly closing basis. Then I would start to get a little concerned.
Where does that strength come from then, for us to get back up to 1350, 60?
Well, I think a big reason why it had that big shoot down on Friday was I think the U.S. economy is doing better than people expected after the retrenchment from the big downdraft we had last quarter, right? So I think all eyes are on the Fed now. You know, you got the jobs report coming out this Friday, and they are data dependent. And they were talking about pausing, and so if you have a really good jobs report, then that Fed meeting is coming up on the 19th and 20th, I believe it is. People are concerned that, hey, they might start to talk a little more hawkish again. Right,
interesting. So when does that jobs data report come out?
On Friday.
On Friday. Mm-hmm. Okay, interesting. So where do we go forward from here then? You know, with these, you know, people. There's a lot of commentary in terms of interest rate hikes in the next year, 2 more hikes or 1 more hike. What are you seeing in terms of your heart?
Yeah, it's, you know, the market began to price in even a rate cut. I think that's a big reason why the gold price went so far.
Interesting.
And now they're concerned about the rate hikes again. Okay. So the combination of it being so overbought, the combination of seasonality also, this is the season where we usually get some profit taking in the gold market. And I wouldn't be surprised to see 1280 be tested here on this move down first before we get a decent bounce, because 1280 was tested quite a few times in January and held. So I wouldn't be surprised to see that. It's also the Fibonacci 38% retracement also.
Okay, but that is, wouldn't some investors like yourself see that maybe as an opportunity? I mean, to maybe invest in the mining sector again, or are you still being a little bit patient to get in, re-enter, and maybe? Well,
now you're asking me something different. You're asking me about the mining sector now.
Okay.
See, so far the mining, the GDX, the selling has been pretty orderly so far.
Okay.
And as far as this Newmont merger, Newmont, Goldcorp, Barrick discussions, I think that is bringing some more attention from generalists into the sector, because this still is, you know, a very deep value play. This mining sector,
right?
You know, it's still there's a lot of companies that are doing very, very well. It's kind of like a tale of two cities. You know, it's the best of time and worst of times, right? Yeah. It's the best of times for the companies that have high margin projects that are in good jurisdictions that are making good money at even $1,200 gold.
Right.
Their share prices are reflecting that. It's the best of times for these exploration plays that are very cashed up. They have good targets and they're in good jurisdiction and they have big projects. But if it's the worst of times, if you're a small micro cap company and you're looking for money, money's very tight right now. It's a bad time to be raising money.
Interesting. So what are some parallels that you've seen from the last time you were here on the segment to this year in the mining sector? What is your current thoughts? You know, anything that you've seen that's very similar that we can draw from and see some conclusions from, or are there some items that you see, you know what, they're kind of a bit out of place and you don't know where to go from here? Like, what is your?
Well, as far as the mining, the junior sector is concerned, I'm very excited, because it's still a stock picker's market. You know, we're still, you know, the sector is still waiting for that dart thrower's move, where, you know, rising tide lifts all boats, and that's not going to happen until the GDX gets above 25 on a weekly closing basis, and gold has a monthly close above 1362.
Okay, well,
that's when we'll technically be back in a bull market in both gold and the miners.
We have a ways to get back there, though.
Yeah, we do. We do. The GDX made a beeline towards it and got stopped short of it,
Okay.
and now it's consolidating.
Yeah.
So, but I am very excited.
And how about the Hui index? What have you seen from there?
Well,
When
I
you
don't
compare to
follow the
GDX?
Huey as
Oh,
much
you don't? Okay.
because there's no volume.
Okay.
See, that's the other thing about the GDX, the SmackDown on Friday. The volume was about 75 million shares, and yet the volume was about 100 million shares when they had that pop-up before. So we still have decreasing volume as far as this correction is concerned. So, but you have to be on the lookout for the GDX to gold ratio. That's still in an uptrend, and it still looks good. But if that uptrend breaks, then I'd be a little concerned for the medium term in the miners.
Okay. Now, you were talking about all these small cap companies. It's hard to raise cash right now. That wasn't the case last year when we were talking, or maybe the year before as well. You're seeing a lot of strategic investments, a lot of JVs. There was money from the majors and mid-tiers investing a lot of the junior sector. And at that time you quoted that a lot of these companies were looking at blue sky potential, 2 million ounces minimum, 200,000 ounces per year for 10 years as a base. Is this still the same case, or has it changed?
No, I still think it's the same case. I think what's going to happen with what's going on with this merger mania of these of the big fish is I think a couple of mid tiers will develop out of this by the assets that they're going to be divesting, and the spotlight will still be on these large projects with blue sky potential in good jurisdictions. And especially in Canada, you got the Canadian gold price is almost $1,800 an ounce. And the currency is really weak. So you have a high gold price and you have a weak currency to pay those employees in. So big projects in Canada are very attractive right now.
Interesting. Okay. And you primarily invest in securities. You also invest in bullion itself.
I have some
other type of investment vehicles like funds. Do you just strictly, based on your investing style, mining equities and financings, whatever it may be?
Well, I like the leverage. I like the leverage that the juniors bring.
Because you did the bullion at one time, right? Years ago.
I do have some. I do have some bullion. I have more silver than I do gold because it's been such a forgotten asset. It's so cheap. And with this bear market is in its 8th year now in silver. In 1980 we had the same thing happen. We had the silver price run up to 50 and then have a really long bear market. Well, this bear market now is 17 months longer than the bear market that followed the last time. Silver shot up to $50 an ounce. So it's getting really long in the tooth, and you're seeing that by a lot of these silver juniors who have been left for dead. A lot of them are still holding their gains from December after tax loss selling season ended. So watch the silver juniors also. The SILJ, which is the Silver Junior Index, it has been outperforming the GDX.
Wow.
Since
how
since
much?
December.
Not
much, but it is trending up. So if that trend breaks down, that would be another warning sign.
Okay, interesting. Okay, so I just want to step back and look more at something you mentioned about the merger mania. Now we've seen a lot of these transactions occur, but is it good? Is this a creative value that's being created, or is it just like what we did several years ago, where they were merging, they were growing, they were acquiring just for the sake of, I'm the biggest producer of more ounces. So is that the same thing happening now, or is it actually, there's some value being created here?
Well, I think the main reason why this is happening is because the gold industry needs to attract generalist investors. And the only way that's going to happen is if we have a big company.
Interesting. Yeah. So then with those generalist investors, and we are seeing that actually, we're seeing several very wealthy investors that are generalist investors that are coming to the space. And you're seeing all these names and you probably they don't really see often in the mining sector. Is that good for the industry in the long term? Are they using this as a trade, you think, in your opinion, or is it more of a long-term?
No, it's a long-term, because a lot of these investors, these high net worth investors, these investors that are in the spotlight you're talking about, they see the value and they know it's a long-term play. So I think that the tide is slowly turning into a bull market in the mining sector. It's happening slowly. You see all these signs that we discussed earlier, and I think that will continue. I think the bifurcation of the good companies, of the high quality companies, the high quality growth-oriented producers, the developers, and,
Right.
and even the microcap juniors that have
Right.
really good projects.
Right,
That
right.
bifurcation is going to continue. Because if you take a look at a lot of the charts of these really well-run companies that have good projects, you wouldn't think they're gold companies.
Right. Right. Interesting.
So that is happening. It's not like 2015 where everything was going down.
Right. Right.
You know,
Exactly.
it's
And you're still
slowly
seeing
turning.
a lot of these share prices of a lot of these companies that are juniors and mid-tiers that are still hanging there at pretty
Right.
good, with a good base, right? They haven't dropped a
Right.
lot, but there's still a lot of support.
Right.
So
a few I own
it's
are
quite
at
interesting.
multi-year highs.
Yeah.
I mean, you have to find them, and you
Yeah.
have to search for them,
Yeah.
and you have to do your research and make sure you look at something as far as a growth-oriented producer is concerned.
Yeah.
You know, balance sheet is key.
Yeah.
You know, jurisdiction is key.
Yeah.
You know, they have to be high-margin projects.
Yeah.
You know, they have to have a lot of growth.
Right.
And they have to have the right management team that knows what they're doing, that knows how to build a gold company behind them.
Interesting. Well, great tips, great commentary. Last thing, your market snapshot. Are you bearish, somewhat bearish, indifferent, cautiously optimistic, or bullish?
Wow, those are that's a lot of choices.
Yeah,
you know?
yeah.
Short term, I'm a little nervous.
Okay.
I'm a little nervous.
That's not one of the options, but okay.
That's not what.
No,
That's not one of the options. But short term, I'm a little nervous because I'm a little concerned about how that Friday action played out.
Right.
You know, it was in the morning. The GDX was being bought as gold was down.
Interesting.
And then as soon as it started to get towards 1300, the bottom kind of fell out of it.
Interesting.
But it's still above its 50-day moving average.
Okay.
And gold is right at its 50-day moving average.
Okay.
And you know, that is a line that a lot of technicians and a lot of
Right.
people in the sector look at. So, but still. That 1250 level is something that really needs to hold. You know, a lot of these companies that have really good projects, you know,
Right.
if they do a PEA, 1250 is the number they use.
Yeah.
You know, so also technically, you know, it's 1250 is the 200-day moving average as well, and also the 200-week moving average. So that's a really important level to keep an eye on. And also another thing to keep an eye on, like I said before, is that GDX to gold ratio. You don't want to see that uptrend broken.
Right. Right. Okay. Great. Okay. So I guess you're indifferent.
I guess I'm indifferent. Yes.
All right, well, if you want to find out more information about David Erfle and his newsletter at juniorminerjunkie.com, we'll also include the contact information below in the description. Feel free to contact him directly, and he'll definitely give reply, and you can find out more about his newsletter. Okay? Thank you so much.
Thank you, Sonny.
All right, David.